The lending market for senior housing and care has been pretty active in 2013, probably will continue even more active in 2014. And I'm here with Imran Javaid. He is the Managing Director of Commercial and Specialty Finance at Capital One Bank. And Imran, a lot has been going on at Capital One Bank in the past couple of years, but recently you announced the acquisition, not you personally, but Capital One, the acquisition of Beach Street Capital. What's that going to do to your seniors housing platform?
I think what it allows us to do, Steve, thank you for having me here, but what it allows us to do is be a full spectrum lender, right? We have always been a balance sheet lender. Now this will give us agency capability, and then we will be a one-stop shop for people who so choose to have both bridge capabilities, balance sheet, or agency. We can cover it all.
And is this something customers have been asking you about, or?
We've been, but certainly that is a question that has come up in the past. So absolutely, that is a question that has come up, and we're excited to be able to offer that full spectrum now.
Yeah, no, that'll be good.
Yeah.
And when you guys first started the senior housing group at Capital One, I know you had a business plan, obviously. How has that gone? Have you met your expectations, exceeded it?
Yeah, so we started out with, the primary goal that we started out with when we first talked was we wanted to build our brand recognition. Now, Capital One had been lending in this market in its footprint. So we wanted to build a national brand for Capital One for lending in the space, and I think we've been successful in doing that. So that was our objective number one. Secondly, we had fairly aggressive goals for the fact that we had not been lending in this space, and we've met all of those objectives and exceeded those goals, at least so far, knock on wood, and hope to continue exceeding those.
Is there a particular area you want to grow in, expand in? Skilled nursing, senior housing?
So we like the needs-based aspects of the skilled nursing or assisted living facilities, CCRCs as well. Where we are more attracted to the needs-based side, we think independent is less needs-based driven. So we're not as active in the independent space as the others. But that's the area we like to grow. Since our inception, we've been lending on the middle market. That means basically regional operators. That doesn't give you a size per se, but it tells you what our regional operators are. So the smaller and larger regionals, that's been our market. Not that we haven't done any of the really large transactions, because we have done bookends on both the really large and also the smaller shop, like the 2-facility operator. We've done those transactions as well. But our focus has clearly been in the middle market, so we would like to continue to grow that.
And when your customers are coming in, what seems to be the priority? Are they looking for a low rate, looking for low leverage? Are they looking for minimal covenants? What's the sweet spot for them?
Yes to all.
Yes to all.
The reality is, people would love the interest rate optional product, but we haven't found the interest rate optional product yet. So we're not offering. No, I'm just joking. No, in reality, obviously, the reality is everyone has different goals, right? And so we definitely get a lot of people in who are looking for the lowest rate possible. We're able to compete for those. We get organizations, especially private equity backed, transactions in which they're looking for covenant flexibility or equity cure provisions. And we're able to process both of those as well to give them the right structure and the leverage. And so, we get to know our customers, I think. And so we figure out what is important to them and are able to provide what they need based on that. And we are able to cater to both of those spectrums.
And are they looking more for fixed rate or floating rate, or does it not matter anymore because you can swap in anything you want?
Yes to that too, right? Because again, it depends. Different strokes for different folks. Again, people are looking for, if they're looking for bridge to agency or a short-term goal, lending solution, they're looking usually for floating rate transactions, right? But then there are others who don't want to go down the agency road, and those we are able to offer fixed rate if that's what they want. We're able to offer terms of up to 10 years on a fixed rate basis. With that comes some provisions that obviously prevent as much flexibility in prepayment And that's what they have to evaluate. What do they want to do?
How about development financing? Because that development has been heating up. Are you seeing much of that, or do you want to do much of that?
Well, I mean, we do development. I would say we do develop. We see a lot more transactions than we do on the development side, which I think most lenders would probably attest to. And the reason is very simple. I think development is much easier when we're looking at a customer who's already in-house, right? So if it's the first relationship with someone, that's hard to do, the first deal as a development deal. But if it's somebody who we have done business with and comes in and, this is the third transaction or so on and so forth, we will do development for those guys because we have a track record. Mm-hmm. And we feel comfortable with obviously doing business with people that we have track records with.
And what kind of properties would that development typically be for you today?
So, the assisted and Alzheimer's is prevalent all over. We have done some of those.
Don't say prevalent all over. That means there's too much of it.
There is too much. There is too much in certain areas, which is why it makes me nervous in some certain instances. So we are very selective about what we do. So we have looked at a lot. It was my point, and we've been very selective. So we've done some of those. We have done some replacement financing for skilled nursing to do some aging plant that was essentially going down. That's one of those things that's as easiest for us to look at and get our arms around because it has a whole slew of other restrictions. We also have looked at and not done yet, but come close to a new CCRC project as well.
Really?
So yeah.
Entrance fee or rental?
Entrance fee.
Entrance fee.
Yeah.
Yeah. You don't see banks doing that much of construction financing on that.
Right. We like that product. We like CCRCs, and I think in selective circumstances, we're very, very selective. In selective circumstances, it makes sense.
Yeah, you better be careful. People are going to hear that and they're going to start calling you.
The people who we like are already calling us. So.
On the straight banking side, I know you don't want to say you lose business, but everyone loses business. I mean, do you find that people end up going to HUD because they like that non-recourse 35-year loan?
Well, it's hard not to like the non-recourse 35-year loan if you're a long-term holder, but it's not the right product for everyone. So if you are, if you want maximum flexibility or, you're not really going to be a long-term holder of this, it's not the right product. And for those people, we have a whole slew of other solutions we're able to craft.
Well, I was going to say, where do you find you can provide the most flexibility for your clients?
I think in structure, right? We get to know our clients really well. And I'll give you an specific example of that one, which is, on the front end, this is going to sound bad, what I'm going to say. We had a client who was very concerned about bad boy carve-out guarantees, right? So as a banker, that makes you pause and say, why are you concerned about bad boy carve-out guarantees? When we got to know the client and understand what their concerns were, they had been burned specifically on something that was not necessarily a provision or anything like that, but bank essentially doing things that were outside of the purview, and they had to litigate and all that. We really got to understand and know them. They're one of our best clients. And we did the transaction with them, crafting an appropriate bad boy guarantee that we felt comfortable with, they were comfortable with, and everyone was happy. And we got our loan actually paying off at the end of the year. So it's been a successful loan, but we really had to get to know our client and understand what their need was. So I think in structure is where we can be the most flexible. Because for agency lending, it either fits your box or it doesn't fit your box, right? I mean, there's certain parameters. For us, the relationship is the most important. So if it's somebody we have a relationship with, or somebody we are building a relationship with, getting to know them, understanding what makes them tick, or what makes their transaction tick, or what are their basic needs, that's where we can provide and be flexible.
Okay, good.
Yeah.
Well, it sounds like you're obviously off to a great couple-year start, and good luck in 2014.
Thank you.
All right.
Appreciate it.
Thanks for sitting down.